Hey, what's going on everybody? Leo Invest here, back with another video. Today's video is going to be recapping a NASDAQ short position taken on April 17th, 2025. And just before we get things started, I do want to clarify that I did not take this position as I missed my entry by about 5 minutes, but I still thought that this would be a very good trade recap to analyze with all of you how I take these A+ entries by utilizing the Fractal model. And so here we have the 5-minute signature for this entry. And just before we break down actually how I took my entry, I think it's very important that we look at how I identified a bearish setup by using higher time frame alignment. So getting right into things here, we're going to move to the 4-hour time frame to identify where and why I took this trade. First and foremost, what are the things that we see on my chart here? Well, when it comes to this Wednesday 2 p.m. candle, what do we notice in comparison to those previous two Wednesday candles, that 6 o'clock and that 10 o'clock? Well, we had a very aggressive bearish movement to the downside, followed by a continuation lower. But this Wednesday 2 p.m. candle ended up having a bullish closure with a very large wick run to the opposing side. Now, what does this mean, especially when we're looking at a higher time frame assessment? Well, when you see a large run of a candlestick followed by an opposing candle body closure, and in this example, a bullish candle body closure after a bearish move, when you have such a large run that is larger than the candle body wick is when you can actually identify a potential reversal signature. And so here, this 2 p.m. closure did indeed signal a bullish reversal signature on NASDAQ on the 4-hour time frame. And then what did we see happen next? Well, once we formed that bullish 4-hour reversal signature, we saw a 2-candle continuation higher all the way to around 18,577. And then this 2 a.m. candle on Thursday ended up having a run higher to around 18,646 before having a closure bullish yet again. But what's the difference between this 2 a.m. candle compared to this candle, this bullish move here formed by this 2 p.m. Wednesday reversal signature? Well, this 2 a.m. candle is quite different because when we look at these reversal signatures, once again, we want to see a large opposing run followed by a candle body closure to the opposing side. But with this 2 a.m. candle, we saw a very aggressive bearish candle run, aka the wick of this candlestick, but a relatively small bullish close. And so even though this did print a reversal signature, and it was a bullish closure, this still does count as a reversal signature. It's not as high value as I would typically want to see with a reversal signature like this 2 p.m. candle on Wednesday, but this is indeed still a very valid reversal signature. And so what did we see happen next? Well, we printed this 4-hour reversal signature, and then when we look at the next candlestick, so after this 2 a.m. closure, this 2 a.m. to 6 a.m., this new 6 a.m. to 10 a.m. candle formed and respected this equilibrium of this 2 a.m. Thursday candle. So what that told me as a trader is when the wick respects the candle equilibrium, the previous candle equilibrium of a reversal signature, we can anticipate a bearish move lower. And that's exactly what we had happen on this 4-hour time frame, because the 6 o'clock candle retested the equilibrium of this 2 a.m. candle, rejected back below, and gave us some smaller time frame alignment with some type of reversal signature. And in this example, we'll be using the Fractal model and utilizing a change in state of delivery followed by some type of session liquidity sweep to validate our bearish entry on this trade. So now we'll go to the 5-minute time frame and identify the entry for this trade. Well, if I go to the 5-minute time frame now on NAS, here's what we'll see, right? I'm going to take the replay tool here and we'll just go back a little bit and activate the Fractal model. Going to do this for visual purposes since I think it makes it a lot easier for you guys to see whereabouts I took my entry. And here on the 5-minute time frame, what do we see happen with NASDAQ? Well, this EQ signals that 4-hour candlestick, that 2 a.m. 4-hour candlestick equilibrium. And so what do we see happen with this equilibrium? Well, at around 2 a.m., we saw a closure above, a rejection back below, and a continuation bearish leg lower. Then what happened at this 8 o'clock open is we formed a C2 candle, a candle 2, which swept this equilibrium from that 2 a.m. candle and had a closure back below it. And so when we see this equilibrium get respected and we formed a C2 candle, we now want to look for some type of change in state of delivery to form prior to taking this entry. And here, luckily, I'm making this simple with the fractal model, we formed a beautiful change in state of delivery on the 5-minute time frame on NASDAQ. So I'm going to mark this out on my chart here so you all can see what I'm looking at, and I'm going to deactivate the T-Trades fractal model to make it simpler to see. And so once again, to reiterate, what did we see happen? We broke above that equilibrium, immediately had a bearish closure back below, a bearish leg lower, and then at this 8 o'clock candle, this new hour open, we retested this equilibrium, sweeping that equilibrium once again, closing back below, giving us more bearish signature, and then now we formed a change in state of delivery with this new candle to high. And so with this change in state of delivery, what I wanted to look for was to see a candle body closure of this change in state. And so here, what do we see happen with this change in state? We had a candle body closure on the 5-minute, which now signals my short entry, because now we've used multiple different layers of confluence. We've used the candle equilibrium in alignment with the 4-hour time frame, giving us a higher time frame alignment with our smaller time frame entry. We have swept this equilibrium, respected it, and also formed this change in state of delivery with a closure below. So this right here would give me a short position entry into this trade, which I'll mark out here. And our stop loss being at that, you could either do it at the equilibrium if you wanted, but that's a very wide stop, right? That's 113 points. And so in this case, we'll just use the high of this candle body movement here, right? What do we see now with this trade? Well, with this change in state of delivery, we want to be targeting a 2-to-1 risk to reward ratio. So I'm going to drag this down now to our 2-to-1 in anticipation of this move, making me 2-to-1 profit. And so once we have this closure, we're going to enter a short position with our take profit being at that 2-to-1 and our stop loss being at the change in state of delivery high. And you can move this around with what you're comfortable using, but this is where I probably would have placed my stop, just because nobody wants a stop that's greater than 100 points unless they have the capital to do so. So here, now that we have aligned the higher time frame with our smaller time frame alignment, plus we have identified multiple layers of confluence that give us confidence in this bearish bias for this bearish short position play on NASDAQ, we can now assume that the trade is going to hit our 2-to-1 risk to reward. And so at this point, we just sit back, relax, and let the trade do its thing. So I'm now going to play out these candlesticks and we'll see what happens here on NASDAQ. Here we see we retested that change in state of delivery, continued higher, rejected back below this change in state on the 5-minute, had a very bearish closure with a bearish continuation at that 9:30 open, and then let's see what happens here. Let's see if we end up taking out of this position. Here we retest that change in state once again, reject back below that bearish signature, and we finally get a closure below, netting us $2,490 with one mini contract. So just to reiterate this trade once again, we analyzed the higher time frame analysis and determined a bias by utilizing that reversal signature on the 4-hour. Then we came to a smaller time frame to align an entry model utilizing the fractal model and this change in state of delivery formed by this C2 that swept that 4-hour equilibrium. So here would be an A+ entry for short positions on NASDAQ, netting $2,490 for a mini or $249 for a micro. So this trade was beautiful, ended up retesting that change in state. We saw a continuation lower, netting us a beautiful 2-to-1 risk to reward. I hope you all enjoyed this video, and I'll be doing more recaps like this. If you like this, please feel free to follow me on Twitter, as well as any of my other social platforms linked in the description, and I'll see you guys all in the next video. Have a good one.